Our first guest says the market has stalled. We're not due for a correction, we're due for consolidation. For perspective, we're off to the TSX Broadcast Center for Barometer Capital's Diana Avigdor. Diana, good to have you with us again.
Thank you very much. Nice to see you.
The technical analysts will tell you that the longer the base, the better the case for a rally. Are you telling us that this consolidation phase is exactly that?
We're not technical analysts, but we do mix price action with fundamentals and top down as part of our process. We think that we've seen this several times in the history of the market where you have a sharp rally off the bottom and then you can go through weeks or months of consolidation. Don't forget we're going into earnings season and we had the commodity rally that has been one of the biggest short covers in the history for a long time. Back in January, February, the contract on the oil, for example, open interest on the short side was so high, and we've seen that all close out, and the commodity is stalling a little bit. So we feel that we can go into some consolidation here. A lot of the sectors that have rallied a lot, say home builders, airlines, they can come in 5 to 7% without actually breaking trend.
I'm told you're a fan of gold. Are we talking the commodity or the equities?
It's the commodity and some equities. One of our larger holdings that has been our holding for a while is Franco-Nevada. Now that is a royalty company. It tends to outperform, and it has proven outperformance both in bad markets and good markets. And it has had an opportunity to purchase a lot of revenue streams. And as price moves up, they will stand to benefit from the differences on what they paid and what they're getting in their royalties.
What about the underlying commodity? We've seen quite a run just since the start of the year. To your point, is that part of the short covering scenario that we've seen play out? Is there anything fundamentally underpinning the value of an ounce?
Well, gold. Gold is a macro metric. Gold will play into your conversations about negative interest rates. Gold will play into your conversations about a store of value of money. Gold will, as it relates to inflation, which doesn't look like we have too much of. But in terms of the gold companies, with oil trading at $35, down substantially from where it was several years ago, it is a major cost input into the gold companies. So with costs lower, especially those that have, for example, exposure internationally, say emerging markets with very, very weak currencies, local costs are low and the revenues in US dollars that may go up, that creates better margins. So from both perspectives, both in terms of the macro situation that underpins gold and in terms of the companies that have really cleaned up, some of them really restructured, and the margin situation, there is an opportunity here for a strength. And to our discipline and to our process, we always look for increasing breadth and other internal indicators, price action that supports the themes. And in this case, the gold price and some of the companies' price goes with our total discipline, and price action supports the themes.
I guess you can't say the same, though, about the energy space and the energy stocks therein. Are you still waiting for the dust to settle on those that have over-leveraged and can't afford to pay their bills?
So for context, we have sold our energy sector down to zero a couple of years ago, 2.5 years ago. And for the first time in a couple of years, breadth indicators were turning positive back in the middle of January and early February. To that end, according to our process, we started legging in. And we have increased our weighting in energy first time in a long time. We are still underweight, and we have been underweight as the short covering, when it ended, we needed to proof for a second leg. And everybody is watching and holding their breath to see whether this decline in the commodity price is indeed just corrective or the short covering is over. And us too, we're underweight. We have decreased increased our underweight. We have sold some of the stuff that we have purchased. We are very, very disciplined sellers. At Barometer, we pay attention to managing losses almost as much, if not more, than creating gains, because it is that part of the equation that will save your money, protect your capital, and keep you in the market for the future. So for the energy sector, our indicators, the commodity sector is one of the only indicators that has turned down. We had three themes going in March: yield, commodity, and leadership of older sectors such as industrials, technology, and discretionary, and maybe a couple of more. The only one that turned down is the third one, the commodity.
Diana, thank you so much for your time today.
Thank you, appreciate it.
Diana Avigdor is a portfolio manager and head of trading at Barometer Capital.